Good afternoon. It's the last hour of trading. We just entered it, but what we're going to cover is the VIX.X daily volatility S&P 500 fear indicator. And you can see here that every time the market puts a bottom in, the fear indicator goes down. But then the price volatility of the broader markets for the calendar month of June and the latter part of May have had on a daily level, they've had their look at equities sell off, but we put bottoms in and equities rally when this goes down. Then when the fear indicator comes back up, equities are selling down. When we come to the bottoms, then equities are bouncing intraday, going to the bull side. When this breaks out, look at here. So the volatility, MMTs, is that we broke out heavy yesterday, and indexes across the board, well, the equities across the board in the S&P 500, a lot of them were selling down and making lower lows. This is a daily reversal, and so equities are bouncing, but it's on a day, off a day. Here is a 60-minute view. The lesson for the new MMTs is that I want to be long equities. When I see the 60-minute thing going down, this is when equities bounce off their support levels. After they make the lower lows at support levels, this goes down your S&P 500 stocks in a broader market when equities go up for the bull, when this is going down. Okay? So basically, a lot of this is on light volume. It is the fear indicator. That is at 60-minute level. And it didn't come until right around, let's say, it was right around 9:30. No, this time right here is where the high was made. That was 15:30. This over here, MMTs, was 9:30 on the time. That 60-minute reversal. That's when equities hit their bottom and started to roll up. As this goes down, equities do what, MMTs? They go up in value for the bull. When this breaks out, the bear is winning. When this goes down, the bull is winning. When this goes down, who is winning? When the fear drops, equity goes up, the bull here is winning. And we consolidated it. And then the bull lost yesterday. The bear was totally in control when that fear indicator was going up. Now, having said that, let's be very specific. The latter part of May and the calendar month of June is where the volatility has entered these exchanges after a 5 3/4 month rally straight up. And you're finally getting the price volatility that we had stated a couple of weeks ago, and that this volatility that you see here now is here for the summertime. I made that clear 3 weeks ago. And that, yes, at times you will increase, but listen, the bull won here, and the bear won here, and the bull is winning here. And it's 60-minute fear indicator. That's how equities buy programs hit. When this is going down in value, then buy programs are hitting the market. It's that simple on intraday level. I will want you to watch the 15-minute level, because you can see that we are long equities that day, and equities are doing well when this is going down on a 15-minute handle. But when you gap up and you pull back and you made higher highs all the way back up here, and look at the 15-minute handle. This is for the whole day right here. And this has come down, and markets are trying to put a bottom in. The indexes from the last couple of days selling of this calendar week going into Friday tomorrow on 6/14, happy Father's Day to everyone out there, is that markets are putting in another short-term bottom. But remember, the volatility is on a day, up a day. So you make more money with volatility. When this is going down, Google made a bottom and it went up. That's an example. We hit 428 on Apple. When this was up here toward the peak and started falling, that's about the time that Apple was putting those lows in. They individually work on their own. However, it's to show the new MMTs on an intraday level how to be either net short or net long. And when we're breaking out here, equities are going down in value. And we haven't had this all calendar year. That's a 15-minute view. I'm going to show a weekly view, because this weekly view is that every time we hit 1850, markets put in bottoms and this comes down. We can see how it did that before. We can see over here relative in the calendar year and the calendar date. The calendar date. This was back on 4,000. It was back in 415. That was 60 days ago. But look at every time that we had sell-offs, this would come down and markets would put in bottoms. This would come down on a weekly level, and the lower it went, the bigger the rally we had. But look at it, rallied right back up here, and this is where it's going to be made right now. For both the bull and the bear and price volatility, is what you have to learn so that on an intraday level you can gauge it clearly. This is what a weekly looks like. Every time we get up here, we get support at the bottom in the indexes, period. And then individual equities that have sold down to their support levels, they're bouncing. That's a weekly level. Now, on a 5-minute level, when you're doing intraday, you want your 5-minute bars going down in value, descending in value, and we're all the way down here now. Yesterday, this is where that breakout happened on a 5-minute level, and equities were selling down. Just the opposite of today's price action volatility. You got volatility for the bull side, you get price volatility for the bear side. It is here to stay for the summer. And a lot of people won't know how to handle it because they haven't seen that volatility working in the last 5 months. And 5 and 3/4 months, the bull has been totally, fully in charge. They have not had these reversals. They have not had both the long and the bear working. And we have it now. And like I said 3 weeks ago, it's here to stay. And I'm going to leave you on a 5-minute level. Well, actually, I'll leave you on a 60-minute level because that's that 60-minute support right there on the S&P 500. Fear indicator. When to be long, when to be short, bull and bear, and support on indexes, and then the trade management thereafter.